In this video, we will guide you through releasing a full-time employee due to a planned redundancy. It will involve the payment of a normal week's salary, unused annual leave with leave loading, unused long service leave, a redundancy amount based on 2 years service, and a gratuity payment of $10,000. This employee was subject to the STSL, the old HEX debt repayment schedule. However, as STSL is not payable on termination payments, the salary and terminations must be processed separately to allow for separate STSL treatments. Other types of terminations, like a dismissal under resignation, are covered in other videos. Payout of unused long service leave is conditional on state industrial relations law and length of service. Long service leave will not be payable in all termination circumstances. For this example, we have determined that unused long service leave is payable. This termination also involves a redundancy payment, which is tax-free up to a threshold level, which can be calculated following the ATO guidelines. Also, additional payments may be subject to caps, and the employee's age may affect the tax rate that applies. Users should consult their accountants or other payroll advisors for confirmation of relevant items and threshold levels, and for clarification of any points in terminating the employee. Because of the complexities involved, Books Plus is unable to accurately calculate the amount of tax payable on ETP items, like in lieu of notice, gratuity payments and others. You will need to calculate this component of tax manually and enter it when prompted. Books has a termination process that is triggered from the employee record and will apply the correct tax scales to the payment of unused leave items according to the type of termination selected and clear the leave registers. In this example, you will first process a normal salary payment as usual. When that is done, you can proceed to check that pay items are correctly configured for the needs of the termination process. Go to Payroll, Employees, select the employee, in this case Richard Redding, and click on the Tax tab. Untick the STSL schedule, as STSL is not payable on termination payments. Click the Leave tab. Ensure that the annual leave item is ticked to Pay on Termination. This is its default setting. Ticking Pay on Termination will ensure that these items get the correct tax treatment, using lump sum tax tables rather than the PAYG tax tables in the termination process. Ensure that the correct leave loading percentage, in this case 17.5%, has been entered in the leave loading column. Ensure that long service leave is ticked for Pay on Termination for this example. While we are on the Leave tab, we can have a quick look at the accumulated leave hours for correctness, and if there appears to be an error, to correct it. Now go to the Pay Setup tab. Change the quantity for the salary item to 0. The salary item must be present to provide an hourly rate for the unused leave items, and 0 quantity, so not to add to the existing leave hours. Next, we need to create any additional pay items. Go to Cogwheel, Settings, Payroll Settings, and Pay Items. Check the list for existing pay items. A tax-free redundancy item has been predefined. If your redundancy amount is greater than the tax-free threshold, you will need to create an additional taxable redundancy item that will be treated as an ETP. In this example, the tax-free threshold has not been exceeded. There is no predefined gratuity item, so click on Add to create it. In the pay item type, select Earnings. For earnings type, select Termination. Set a name for the item, like gratuity, and add a further description if necessary. Note the next field, Pay Rate Basis, is greyed out and fixed on Other. That is, the amount cannot be calculated by the program, and you will need to enter the amount manually. In the expense account, select your preferred account, like payroll, expense, salary and wages. The checkbox for Include in Time Worked Leave Accruals should remain unchecked. The tax applicable field is greyed out and fixed on termination. And finally, in the termination type, select the appropriate type of termination. In this case, all other termination payments excludes unused annual or long service leave. Click on Save and Close to complete it. We have determined that super guarantee is not payable on the redundancy and gratuity items, so we do not need to tick these items in the super guarantee items included list. We are now ready to start the termination process. Go to Payroll, Employees, select the employee, Richard Redding, click on the Employment tab and scroll down to Important Dates section. In the Termination Date field, enter the date of termination. You'll be asked for a type of termination. Select Genuine Redundancy from the drop-down menu. Now click on Yes, Create Pay Run to proceed to the Pay Run screen. If you click on No, Not Now, the pay items will be saved to the employee, and when they are included in a pay run, these termination settings will be populated, and not their ordinary pay setup items. A new pay run will open with the name Termination Richard Redding and today's date. Enter in the payment date for this pay run. Click on Richard Redding in the table to open his pay run. You should firstly enter the pay period start date and the pay period end date. In the table, you'll see the earnings section populate with the unused annual leave, leave loading, and long service leave. Note that the number of leave hours have been adjusted for the latest salary payment. In the rates column, you'll see the hourly rate is the same as the salary converted to an annual rate. That is, the annual amount divided by 52 weeks, divided by 38 hours in the week, for an hourly rate of 39.4737. Note the annual leave loading amount is properly adjusted to 17.5% of the hourly rate. In the amounts column, you will see the calculation of payments for these items. At the base of the section will be the total of the earnings payments. At the foot of the screen, you will see the section totals, including the amount of PAYG tax for the ordinary time earnings and leave items. If you think the tax calculation is incorrect, then you will have to review your selection for the termination type when you started the termination process. Note that no super guarantee has been calculated for these termination components. Now add in the redundancy item. You can refer to the Fair Work website or your industrial or workplace agreement for the amount of redundancy to pay. We have determined that 4 weeks' pay is due, and in this case that is $6,000. We have calculated, following the ATO guidelines, the tax-free redundancy threshold to be $21,278, so our amount is fully tax-free. Note the total PAYG at the bottom of the screen has not changed. Next, add in the gratuity payment and enter $10,000 as the amount. Note the new total amount for the earnings section. Now scroll down to the company summary section to see the super guarantee payment and see that it is still zero. Scroll down to the tax section. Note that a second line has appeared, Termination, and it is blank. You must manually calculate the applicable tax for the ETP items. You may want to consult your accountant or other payroll advisor on the correct caps, thresholds and tax rates that apply. We have determined that 32% applies to the entire gratuity amount. That is 0.032 of $10,000 for a tax amount of $3,200. So next to the blank tax field, click on the Details link and click on Add New Row. In the taxable component field, enter the total ET payment, in this case $10,000. In the tax-free component field, enter any tax-free ETP amount. In this case, leave it blank. In the ETP code field, select the appropriate code. In this case, select R for genuine redundancy. In the Tax Withheld field, enter the amount of tax you manually calculated, in this case $3,200. When done, click on Save and Close and see the tax amount appear in the Amount and Year-to-Date fields on the Termination line of the Tax section. At the bottom of the screen you will see the totals for the various sections of the termination pay, and in the bottom right the amount of the net payment to the employee. Return to the top of the screen and click on Termination Richard Redding link to return to the main screen for this pay run. Then click on Actions and then Finish Pay to complete the pay run. You can then continue and click on Email Payslip to send the payslip to the employee. Now click on Payroll, Single Touch Payroll to prepare the pay for STP reporting. Click on the pay run there and click on Send to GovConnect STP. This process will mark Richard Redding with the tag Final Event. Then click on Launch GovConnect STP. Click on Open for the STP entity for this business. You will see at the top of the table the entry for this termination pay. Click on Details and you can confirm that the employee is tagged as a final event. And to the left, the amount of the ETP component. Click on the Details link to see the actual information that will be sent to the ATO. The top section is equivalent to the old INB payment summary, and the bottom section is the equivalent of the old ETP payment summary. Return to the GovConnect home screen and click on Submit when ready to send the STP information to the ATO. The final step in this termination process is to clean up the employee record. Terminated employees will not be available on pay runs, and they will appear as terminated on the payroll employee list. But they will still show on the Employees List Active tab. Tick the checkbox to the left of the employee's name and click on Mark as Inactive at the bottom of the screen to remove them from the Active tabs list. You can now view the terminated employee on the Inactive tab and on the All tab. The entire termination process is now complete. Thanks for watching this video, and if this scenario does not match your circumstances, please look at our dismissal and resignation videos. For further help with specific steps, go to help.ipabooksplus.com. If you have any further questions, please email us at support@ipabooksplus.com.